Ladies and gentlemen, welcome back to the channel. There is an AI stock that I have invested 6 figures in, and it's going crazy today. Here in this video, we will go over why exactly this small cap AI stock is up about 20% today, and what could be coming next for Rezolve AI, ticker symbol RZLV. I'll give you a little bit of the backstory around this company as well, if this is your first time hearing about this stock. Now, I'll share my positioning as well. Hit that like button, subscribe to the channel. If you guys want to come get involved in these kind of stocks first before anyone knows about them, check out that link down below in the description of today's episode. This is a big one for us, and I think it's just getting started. I'll share some of my targets with you as well later into this video. But first things first, if you don't know about Rezolve AI, they are in $1.5 trillion total addressable market, maybe larger than that. It's massive, okay? They're targeting online retail commerce. So basically, as the CEO puts it, if 10 people go into a Nike store in person, 7 people are going to end up buying something, like go into the store with the intent of buying something. 70% of people are going to end up buying something. Well, if 10 people with the intent of buying something go to Nike's online website, only about 3 people are going to buy something. And Rezolve believes the reason for that is if you are in person looking at a product, you can see the price, you can see the size, you can see the materials, you can ask questions, try it on, okay? What Rezolve is doing is they are trying to make it more like an in-person experience when you go to buy something online. Now, they have a couple different functions of the business, okay? So they have that aspect. They have great salesman bots, as they essentially call it, that are specifically programmed to AI commerce. Rezolve said from day one, the issue with AI commerce is, for an example, if you have a cologne where the description is going to say something like sandalwood or wood notes or spicy notes, AI, in the way that we know it, is based on probabilities, right? Probabilities of this and that. And so a normal AI model like Grok or Gemini or ChatGPT, they're going to see sandalwood and start popping up recommendations for flooring and for, other crap that has nothing to do with the cologne that you were looking at, right? That is hallucinations. That is errors per se in AI commerce. Well, Rezolve's model does not do that, okay? It sticks to products in commerce. So that's number one, the AI sales agent aspect of this. Number two is when a company partners with Rezolve, Rezolve is partnered with Google and Microsoft. So for an example, if you type into Google, you say, this is literally from the CEO himself, say Barbie pink. If Rezolve has a partnership with Nike, Barbie pink Nike products are going to pop up first, okay? And then you click on that product, and then you go to, let's say, the Nike website, and you can use the AI sales agent to figure out all the questions you have. And then last but not least, the third function of their business, or main part of their business, is the checkout portion, where you can actually check out with Rezolve. Think of like the TikTok shop almost, or like Amazon, where it's really easy to check out. Like that's kind of the product that they have for their brain checkout. Okay. Their recent venture is professional services. The way that you can think about this is a company, let's say Walmart, has tens of thousands of products they need to have images for, descriptions for, all of that. Rezolve is partnering with these retailers to build out their online presence. Rezolve says this is going to be like a hyper growth area for a period of time, but it's not expected to be like a forever revenue source for the company. The margins on this from Rezolve is about 25 to 30%, but the margins for their AI software business are upwards of 85%. So it's going to be a highly profitable company. Now, here's a little bit of the backstory. Rezolve remained largely undiscovered because they went public via a SPAC. So the 12 months following a SPAC, Wall Street does not invest in them. Okay. They're not like a independently traded company, because the SPAC board or the SPAC company has the main role on the board. So like they're not an independent company. One reason why Wall Street stays away from them. So this company was owned about 40% by retail, about 40% by insiders in the company, about 5% from institutions, and about 14% from private companies or private investors. The company was founded in 2016. They spent 9 years developing the software and the AI tools. So as the CEO says, the R&D is largely done. It's been done over the past 10 years. The product is here. The company now is solely focused on selling this product and executing on that. Okay. Well, they just started launching commercial operations earlier this year, and they've seen explosive growth. The CEO said, he's like literally yesterday, he's never been involved with a company that has seen this kind of growth. The company originally set out this year back in April and gave a 90 million ARR target. Okay. Annual recurring revenue by the end of this year. Fine. That's all great and dandy. Well, about June, they came out and said they already hit 70 million. They're on track for over 100 million in ARR. So about mid-year, they were at 70 million. Now, from every speech we've heard from the CEO, and there's been 2 recently, they're basically saying that we are going to smash guidance. Okay? This company is not going to miss their 100 million target. The question is, how high above that are they going to hit and guide for? If they hit 70 million mid-year and sales are accelerating, they're anywhere between 150 on the low side to 200 or 300 million in ARR by the end of this year. Now, the company has a partnership with Google and Microsoft. Google and Microsoft wanted an exclusive partnership with Rezolve. They said no. They said they're not going to do exclusive partnerships. The Rezolve CEO said basically the reason for that is if Microsoft wanted to partner with Rezolve and they were a bad partner, the business would essentially fail, right? By having both of these partnerships, Microsoft and Google are in competition with each other, and they are trying to sell the Rezolve services to their clients, like more than the next guy. So Rezolve is in the middle, benefiting from both of these partnerships. Now, Rezolve has aspirations to be a leader in crypto payments as well, but that's really a Hail Mary aspect of the business that I don't pay much, I don't put any valuation on that when I model what Rezolve is going to look like. Okay, so here's the deal. On October 1st, we have their earnings. We are expecting, again, between 200 and 300 million in ARR. Okay. It's unclear if we're going to get any kind of loose guidance for next year. It's possible we could. Some kind of loose guidance would probably look like $1 billion in ARR by the end of next year. Here's where things get interesting. Now, this company says that they're going to be profitable around 90 million in ARR. That could have changed because that was previous guidance. The company might be profitable when they report earnings. So I don't know how the valuation metric could change, but since they are an unprofitable company, we've mostly been valuing this company based on price to sales. If you look at other similar well-known AI stocks, whether it's Tempest AI, SoundHound, BBAI, Nebius, which is up like 45% today, they have on average price to sales ratios anywhere between 12 and 20. I've been conservative and I've been using a 10 times price to sales. So if we get 200, let's say 250 million in ARR projected by the end of this year, times 10, that's 2.5 billion market cap. The stock's at about a 1.3-ish, 1.2-ish billion dollar market cap. So that would be a double from here by the end of this year, minimum. Okay. That's great. That's fine. The excitement or the exciting part of this is 2026. If we get like $1 billion in ARR projected, by the end of 2026, times a 10 times price to sales, boom, now you're at a $10 billion market cap. Okay, that's roughly a 10x from here, not to mention if the multiple goes up. Now, one reason I've been giving this stock a 10x price to sales multiple instead of a 15 or even on the higher side 20 times multiple, like a lot of other well-known AI stocks have, is because Rezolve is not a widely known about company. So like the multiple's lower. That's starting to change. Today is the first day the stock is up currently 16.5%, breaking above $5 per share, which was a critical psychological level, on zero news. This is the first time the stock is actually trending on StockTwits. Okay? First time. The stock doesn't have a retail investor base like you would think. And there you see it, Rezolve. It still says Armada Acquisition Corp. Like it's still not even updated on StockTwits that this is a, not a SPAC company, right? This is not a SPAC company. They've de-SPACed. They went through the de-SPACing process. Now, even more so recently, Citadel bought 7% of the company at $2.50, which was a zero market premium. So Citadel said, hey, give me 7% of the company. I want to pay market price. That was a green light. Okay, that was a big sign that we were onto something big. What we've seen in the recent 13F filings, everyone is taking on positions now. Morgan Stanley, Jane Street, name the firm, and they're taking on positions right now. Because again, Rezolve doesn't really have any competition at this point. They have partnerships with Microsoft and Google that are fueling their adoption and growth. And the company is significantly undervalued compared to similar AI companies. Even after this rally, it is significantly undervalued compared to well-known AI companies. Now, the real question I've had for a long time is, when does retail start to pick up on this company? When does retail start to get a little euphoric around this company? The first sign of that is today. So that's important. Now, October 1st is the big date. I want to keep in mind for everyone watching this, the RSI is now at 83.66. Don't be surprised if you get a little bit of stall speed here. This is not a company that's going to shoot straight down from here because of what I'm talking about, in my view. Again, I could be wrong on this. But between now and October 1st, it could get a little slow for a period. But I believe this stock goes to at least $20 by December 31st after we get earnings, and hopefully we get some kind of loose guidance for 2026. Okay, that's where things get exciting after October 1st. Now, if we look at option activity today from hedge funds and institutions, you have two different trades. One is a $5 call for September 18th, worth about $44,000. Another one is a $5 call for $161,000 by February 19th. Now, you do have about 1 million shares being sold short today. This stock has a cost to borrow average fee of 118%, utilization at 77.5%. It was as high as 97%. So there wasn't a lot of shares available to actually short. You have a short score of 74 out of 100 on Ortex. I believe a little bit of today, again, could be a gamma squeeze. A little bit of shorts are probably covering on short positions, I would imagine. Once the final numbers come in for the day, I think you're going to have a net short covering day. But short interest of free float is only 7.61%. So yes, could you get a bit of a short squeeze on this? Of course. But I think most of what you're seeing today is actually just retail investors discovering the stock. Because again, first time it's trending on StockTwits and really breaking out. And again, just for full transparency's sake, I like to share my position, okay? In Rezolve, in this portfolio, market values $69,680. Today's return, $9,569.30, up 16%. Total return, $33,065.30, up 90.48%. The average cost in these shares, $2.82. I own 13,000 shares in this portfolio. Okay. It is a huge weighting in this portfolio. Okay. It's like, if you were to do this now, I would say it's reckless. What I am doing is reckless. Okay. It's reckless calculated risk. I've done the calculated risk assumptions on this company, and I determined the only way that I really lose money in the short term, this is my perspective, is if the entire like AI market goes through some kind of large growth scare, like another DeepSeek moment happened again. Okay. Minus that, or some kind of crazy new development in trade or something to really spook markets, I deemed it a low risk. Okay. Now in options, I have 15 of these Rezolve 250 calls for February 20th, 2026. Current value $4,320. Total return 171%, up 27, almost $2,800. Okay. So yeah, position has worked well so far, but I think it goes much higher into the end of the year. Now, I get a lot of people that ask about the options. I do not like the options. Okay. I bought the options a while ago. Okay. The chain only goes to February 20th, 2026. Once the 2027 options open, that's when I'll be looking to maybe buy some more. Now, in this portfolio, currently I have $58,465 in Rezolve. Currently up $27,762, up 90.62%, and a one-day return of $7,800. Average cost basis on these shares, $2.80. Current shares, 11,000. Portfolio weighting, 58.83%. Again, it's reckless, right? Nobody should do this unless you truly understand the company on a deep level and understand that if tomorrow the stock's down 20%, you still have a winner. If you don't understand the company and the stock goes through a little bit of a reset and you're going to get scared and like lose your money, you know, do not go big on this company. You don't need to go big on this company. I just like to go big when I see opportunities that I deem as a high probability of success. Okay. Again, market cap today, 1.13 billion. So I was estimating a little bit on the high side, but the stock is up a lot in the last 3 months. It's up 162%. But again, this is the first day that retail is really getting involved in this company. Institutions got involved in this company around August 17th, once the 12-month de-SPAC was over with. So today, it's a lot of retail getting involved. And October 1st is really the date that could send this stock substantially higher. But again, I am not a financial advisor. If you listen to anything I say and take it as financial advice, you are going to lose all of your money. I am not your financial advisor. I am not related to you that I know of. Do not take investment advice from this video. I literally told you in this video what I am doing is reckless. Okay? It is reckless. If you do not understand this company on a very deep level, you will lose all of your money. And I say that to be dramatic, like the odds of this company going to zero are very low, right? But you get the idea. You will lose money if you blindly invest your money based on a YouTube video. I want to be very clear on that. Do not do that, okay? But I think we're in the early stages, okay? It's actually funny. This company had a $2 billion valuation when it went public via SPAC. And again, it fell a lot, which is pretty typical via SPACs. Now, what's also pretty fascinating is yesterday, Rezolve CEO said Sierra AI on, I believe, the West Coast is doing something similar to Rezolve, a little bit different, but similar. They just got a valuation of $10 billion, and they are targeting $100 million in ARR by the end of this year. The CEO said yesterday that he believes a massive re-rating is coming in the stock into next year as people discover Rezolve. Like the value proposition is already there. The stock is already at depressed levels compared to, you know, where the stock is going to go in the future, especially as we get rate cuts, as inflation goes away and tariff uncertainty hopefully goes away. A lot of value is going to be unlocked in this company, in my view, into year end, and especially in 2026. This is not something that I plan to sell anytime soon. I believe the stock's going to be $20 by December 31st. I believe the stock's going to be in the 40s next year. The company will raise capital at some point. They're not in a dire need to raise capital. They have plenty of cash, and they're likely beginning to be somewhat profitable or pretty close to profitability as is. But eventually they will use the stock to raise capital. I believe it's probably in the teens when they do a capital raise, if not a little bit higher than that. Keep in mind, the insiders in this company own about 40% of the company, so they are aligned with shareholders. If you are making money in the stock, they are making money in the stock, and they don't want to end that party prematurely. So none of this is a recommendation. None of this is financial advice. Stocks that go up 160% in 3 months are, a little tricky in the very short term to play. I'm just under the belief over the next 12 months, this stock is going to be substantially higher. Could be a 10x from current levels. Hit that like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. If you want to come get involved with the community, come potentially get involved with some stocks like Rezolve and others before they explode, right? That's the idea. You want to get in before they have parabolic rallies. But again, I still think we're very early with this one. Have a great rest of your day, and I will see you in the next one.